Alrighty then, mic check, mic check. Welcome aboard, ladies and gentlemen, boys and girls. My name is Vinny. If this is your first time with us, well, you have been missing out. Welcome to the playground here, as we like to say. And of course, if you have not done so already, make sure you are following us over here on our social media, especially here on Instagram. Most fun is happening right here behind the scenes. And of course, here is how you learn how we earn, right here on Discord. All the links to all of our training, all the free stuff, all the free software down in the links down in the description here. But I have got a really cool topic that I want to go here with us here today. And of course, we are the Algobox crew, and don't forget, trading is risky, but I want to talk to you guys about some really cool stuff. We were going to do this on Friday night. We ended up pushing back to Saturday. Had a good time Friday night with the family and things, and I hope you guys had a great week. I have seen you guys absolutely smashing it in a room over there. Fantastic results I'm seeing from the traders in our room. I just got to take a moment and give you guys an applause. This earnings season has been absolutely amazing. I am seeing $10,000 days. I'm seeing folks like literally triple their normal levels here during this event, which means you're doing what I've told you to do. You're doing exactly, you put the pedal to the metal when the markets are giving it to you. All right, so after that, let's go. I promised you guys there's going to be some people that supported what I have been telling you guys for the last few years with our software, with our technology. We are now able to beat institutions. Listen to what I am saying. They're going to say, well, what do you mean, dollar for dollar? Yes, dollar for dollar. We can beat institutions. Write it down. Listen to what I just said. This is a huge statement that I just said. We, right here, you, me, Vinny, Emini, the crew, the people using our technology, our system, can beat institutions dollar for dollar. Now, like, well, Vinny, how can you possibly make that claim? I've never heard that. I don't know that. Well, you hear it here on a regular basis. How? How can that possibly be? Remember, we are not driving the Titanic, folks. There is a different way to drive. You don't drive the Titanic the same way that you drive a Sea-Doo. And if you guys don't know anything about water, well, go ask your friend who is out there on the water. But most people should get that reference and understand big ship versus a small ship and what you can navigate, the waters that you can navigate. You can navigate every different type of water with a smaller craft. Now, you might say, well, yeah, but if you get out there with the big waves, well, yes, that's the whole point. Avoid the big waves crashing on over you. Avoid the storms that will overwhelm you. And we teach you all of that here in how we do it. We talk about the tide, wave, and the ripple off of the multiple time frames that we use. And I want you guys to hear from somebody else. Forget it hearing it from me. These two guys had a conversation around this very, very topic right here. And again, I usually don't follow these guys. Somebody said this over to me and said, hey, look, Vinny, these guys are saying the same thing that you have been saying for forever. Check this interview out. And I'm like, okay, I mean, listen, it's not a jealousy thing. It's not like I actually have a massive level of respect for this guy. I forget how to say his name. I'm going to butcher it. Sosnoff. I hope I'm saying that properly. And then you got Steve Radigan. This guy is back from CNBC days. If you guys remember him on Fast Money back in the day. And these very intelligent individuals. This guy's a software tech guy. This guy was in and around writing the code for Thinkorswim. You guys all take, everybody's got used Thinkorswim for years. These guys were writing Thinkorswim before they got bought by TD Ameritrade. So that's who these guys are. These guys know their stuff. And then listen to what they say here today, folks. He is backing up what I've been telling you guys, what we do with our system. Let's roll. Let's talk with these guys, and we'll have a little back and forth on this as we go.
Skepticism every Wednesday, 1 p.m. Central Time. Dylan Radigan, how you feeling today?
I'm feeling pretty good. I've been thinking a lot about our conversation from last week about whether...
Okay, now remember, I'm paying this at a 1.5x speed here, folks, because I just like to speed things up. So these guys are not actually talking this fast. If you need to slow this video down, then go ahead and slow it down for yourself. But I think this is a good pace for people to get through and get to the information that we want. So if you're like, Vinny, why are they talking so fast? It's because I'm running at a little bit higher speed. So let's roll. I think you guys can handle it. Let's go.
The sort of elite Ivy League schools and the venture capital firms and the Federal Reserve Board and the big elite law firms and the elite banks, whether they're a better filter for greatness and intelligence, or whether the open marketplace of TikTok and, the open commercial marketplace. I thought that was an interesting conversation, and I think I've actually strengthened my opinion. I was thinking about it all week, not all week, but on and off throughout the week. I would think about it, and I've decided that I think you're completely wrong. Actually, the more I think about it, the more I disagree. But anyway, so
I have to tell you, I did an informal study years ago. There's no question in running a business in the entrepreneurial space, we do better with smart people. Really make a difference. But years ago,
smart people really make a difference. I totally agree with that. Now, when it comes to trading, it's a different thing. That's what I've tried to tell you guys before, that there's a different set of not really technology. There's a set of techniques and mental acuity and it doesn't have to be some super high level intelligence individual who can succeed in trading. There's a different level of your ability to manage risk, to take risk, and it's almost, there's some feelings involved with it. But he's starting out right here that if you're going to be in this space, like, you get with somebody smart, folks. I'm telling you, you might want to be with the guy who's 160 IQ who can write code. Just saying. Now here, let's carry on, but don't worry. Like, I'm not going to sit here and tell you that you have to be a smart person to trade. Listen to what I just said. You do not have to be the brightest crayon in the Crayola box in order to be a great trader. These guys are going to agree with me on that as well, especially because of the fact that we now have technology at our fingertips. You can do so many crazy things. We have smartphones that can literally do all this crazy stuff with apps and things in your hand, right? So why are you still reading from books? Why are you still trying to learn trading from books? That is the mistake, and these guys are going to back me up on that. Let's go.
I did kind of this crazy study on my own. Like I said, it was very informal. When I first started out in this business, I started out as a floor trader, and I got my start because some random stranger who I just talked to for about a half hour gave me some money to trade with. I mean, literally, that's how it happened.
Like trading places almost. Like
kind of, like a random stranger in 1981 lent me $100,000 who I did not know.
Okay, everybody just pause just for a second. Okay, this is called God's intervention. Okay, I'm telling you, like, I don't know. Anybody else had anybody walk up to you and go, hey, here's $100,000, trade it for me? Okay, now, yes, over time, as I have grown to where I am and shown proof, I've got people, offering to trade their money all the time, like the hundreds, millions. I've been offered 10 million at one point. I was offered 100 million to buy out my whole stuff from the hedge fund out of Sweden. Like, these things happen when you have proven yourself. But this guy is saying that as a new person, barely, I don't know, maybe he was good on the trade floor. I'm not sure. He didn't expand on that, but he said perfectly random stranger comes up to this guy, says, here, trade $100,000 for me. Does anybody else, did that happen to you? Raise your hand, put it down in the comments below. You want some random person to hand you 100K to trade with? There it is. So this is how he started. Interesting, very, very interesting, fascinating story about these guys. Let's go.
And how old were you? 24.
24 years old, and somebody just walking up to you, but here, trade 100 grand. I'm like, okay.
Which was like an extraordinary amount of money. And I didn't know this person, but it was Chicago. It was like the trading world. There was, even in 1981, there was money flowing. I don't even know how it happened. And
how much of your action did he want back? What was the deal?
It started at like 70-30 or 65-35 type thing. And then it went all the way up to 90-10 based on how much money I made.
65-35 to you.
Yeah.
So it's like the 1981 version of trader funding programs, I guess. Although, look, this is actually, it used to be much more common. Even Tom Dante could tell you. So Tom Dante has, I don't know if he has currently, but at the time when we have talked about his backers, that I don't know if he's using, I hesitate to say this because I don't know if he's currently has a backer, if he's trading his own money or not. But this is how Tom Dante works. He another person, entity backs him, and he trades his money, and they have a split format, which is a very common split. 70-30 is very common. I'm not going to say what Tom has, but if he wants to give it to you and tell you guys, then talk to Tom Dante, and he'll tell you what that is. Here we go. Keep going.
Yeah, pretty good. Yeah, not bad. And I had no choice. I mean, that was it. But so the purpose of the story is, though, because I got my start that way, when I started to become reasonably successful a couple of years later, I felt an obligation to back other traders. That was kind of, a way to invest my money. I wasn't a very good investor in real estate or other things, so I invested in other traders. But I didn't know what to actually look for. I wasn't sure which was more important. An MBA from Michigan, or an MBA from DePaul, or an MBA from MIT, or an MBA from Carnegie Mellon, or a high school kid that played offensive line, or a professional wrestler, a number 1 draft pick by the Kansas City Chiefs that blew out his knee, somebody that, that was like a superstar athlete, very competitive, or somebody that didn't even graduate high school, but just was a street smart kid. And I tried to do all these things and figure out, is my Michigan MBA going to make us more money? Is my Carnegie Mellon MBA going to be a better trader and make more money? Or is it going to be this kid that, played football for, some Southside Catholic high school in Chicago?
And did you arrive at an answer, even if it was unscientific?
I did not. That's the amazing thing. Not only did I not arrive at an answer, I couldn't figure it out. It took me 20 years to come up with the conclusion that it's completely random. Completely random. Like, I had some kids that were so freaking smart, they were borderline like geniuses, and they had no chance. And I had other kids that were like really not that bright, but street tough, and they made millions. But then again, some of those not that bright, like I said, number 1 draft pick, offensive line, monster human beings, professional wrestler, monster human beings, couldn't make a dime. So there was nothing, I couldn't nothing made sense. Like I couldn't figure it out. So
I actually have said this to you guys too. So there is a certain mindset, an emotional level that you'll connect with. These people who try to pretend like emotions shouldn't be involved in trading, don't ever believe anybody like that. Anybody who says your trading should be emotionless, folks, that's not the ultimate level of success. You should be able to use your emotions to push you forward inside of your trading if you've got a good system. Now, you have to have a system first, right? You need to have an intelligent method for what you're doing. And then applying risk, though, and greed to balance out fear and greed, that has nothing to do with intellect. Think about what I just said. Balancing out fear and greed have nothing to do with intellect, but having emotional intelligence. Oh, man, you guys are going to get so upset about this now in the comments. I don't really care. I am literally factually telling you this is it, is emotional intelligence, to be able to move your way through the emotions, the fear and the greed. I don't know why you people understand like this. You know that fear and greed are the two things that control market conditions, right? Fear and greed. And yet y'all are like, oh, so now I need to eliminate all of my emotions. I just what? No sense whatsoever. No, you have to be able to balance out the fear and the greed in you. I teach you how to do that, and I give you a system that basically maximizes that for you, and we have a cheat for the markets. And here also, they are going to talk about that here in a moment. But I love that he pointed out a couple things. I also want to say this, folks. If you are heavy, listen to me right now. Listen up. If you are heavy, what do I mean by heavy? You need to ask yourself, you know if you're overweight. Everybody does. Even if you are like, well, you're satisfied with where you currently are, that is fine. But I'm going to tell you, you being a heavy person, okay? Heavy is not healthy. Listen to what I just said. Heavy is not healthy. And it's not mentally healthy. Because what happens is when you are a heavy person, your brain at high levels cannot function at its highest, at its peak, because there are so many cells in your body and things that it's having to work on. Everything from whether it's muscles, I don't care if it's muscles, fat, whatever. This is my personal opinion on it. This is, and what I have studied and seen in people is that heavy is not healthy, folks. I mean, I almost kind of proven it with COVID right now. The people that are dying are heavy people. These are just facts, folks. Don't kill the messenger. These are just facts. I am telling you that if you are not healthy, if you are not at a healthy weight, you are not doing your best. You are not going to be at your best. So if this is your, hey, we're right here just past January and you're going to have a new diet program type of thing in your mind to like, I'm going to do it because I want to be good at trading because you want your mental clarity, then let's go, okay? And I'll talk about that in some of our other videos, so I won't go into that here today. But I think it's funny that he points out that his big, bulky football guys, as I said before, that doesn't work because your body, your brain has only a certain level of capacity. And you may not know it, like when you're not thinking about it, it's not like you're thinking about all the cells in your body, but parts of your brain are having to work on every part of your body at every given moment. You guys know that? And when you're eating all the time, your body is constantly having to focus on transferring that food into ATP and to all the different cells that are going into your body. If you turn that stuff off, you start to get more up here rather than down here. You see what I just said right there? You're getting more up here than down here. When you eliminate from down here, you get it up here. Very basic, simple type of scenario. But if you want to increase and get better at trading and be a smarter person, better at what you're doing, everything in life, lose some weight. I'm just telling you, it's a fact. Anyway, he's backing up his own study by saying that. Okay, when he's like, I don't know, I got these big tough guys, and like, okay, get it, the athlete guy, whatever. Oh, no. There's a reason when they say, like, are you a smart guy or you're a jock? Well, when you're a jock, you are going and hitting the gym all the time. All those muscle fibers, all the stuff that your body is, you tear down muscle fibers and your body and your brain is having to repair all those. Your body's in a constant state of repair. Your brain is having to do all that, folks. This is what I just said. Your brain is having to do all of that work. When you turn that off, you have higher cognitive functions. Let's move on.
Getting back to your discussion, I think in the world of entrepreneurship and business and stuff, we've definitely had a lot more success in this world with very smart people. But back in the trading world, where markets are random, the results were so random. It's crazy.
Yeah, and I would imagine that's true for like the thing with trading is it's a profession of something where it's some sort of it's some sort of unique set of skills in terms of situational awareness and focus and pacing and cadence and whatever. Plus,
did y'all hear him say cadence? Did you hear him talking about the pacing, the ability to put your mind in this proper framework? Folks, y'all need to pay attention. These guys are speaking some serious wisdom and truth right here. Yes, it's coming off fast, but I'm telling you, This is good stuff. Here we go.
certain amount of luck, and then also a certain amount.
And yes, a certain amount of luck. Like I've told you guys before, as we're trading and we get in our target 1, target 2, the parts that where we've got our edge particularly to hit the target 1, target 2, then a certain amount of luck comes in where we cannot force the market to make its big run. But we have methods for making that run. But this is where the emotion starts to kick in when you are holding a position for bigger moves, right? But I give you guys things that will show you, well, we're going to wait until we get a red, right? This helps. We are waiting for, I've got a yellow. Let's do a yellow up here. We got a yellow gold. We'll call it the gold PRZ target, the PPRZ, right, showing up that I show you guys. So there are technical things that can help with this, but a lot of this is that emotional level part of, okay, now I also, am I ready to hold that out? And it's a little bit of luck because you don't know. You don't know if the market's going to hit up like this, but can I use stats? Yes. So what time of day am I going to hit one that's going to be a little bit larger? Do I have a time window in which this is going to be able to happen better? Yes. What do we got? 10:45 to 1 p.m. What is this? Beast mode hour, right? Where you're going to oftentimes get those pulls all the way into the end of day type of scenarios, which is where our beast mode hour comes from, right? So, okay, carry on. Let's go.
Some psychological condition that is either good or bad. I don't know. There's some set of very specific, probably set of characteristics on some level for that job, just like it might be for a heart surgeon or for like something else. But I guess my thing that I was thinking about was, and that makes total sense to me, but I do think that as corrupt and as sort of difficult as some of these major institutions, again, whether it's Ivy League schools, the big VCs, the number of the top tier banks, top tier law firms, or the board of governors at the Federal Reserve, the chances that one of the men or women in one of those rooms, whether it's the chairman of the department at, Stanford, or whether it's the managing partner at, whatever, Andreessen Horowitz, or pick the fancy institution, the chances that person is really smart and probably smarter than you, the figurative you, not the personalized you, although probably smarter than both of us too, is higher. In other words, I think that those institutions are still the best at identifying intellect, which doesn't necessarily equate to market success.
You see, there it is again. The intellect does not dictate market success. Let's go.
I agree with you with that statement. I agree with that. Anyway, so I have an interesting topic for today. There's been a lot of documentation in the last couple of weeks about talking about the shift in the world of finance from a kind of an equity first world into a derivatives first world. So in other words,
so people who don't know what that means, this is from stocks when he says equities. I wish people just say what they are, okay? But from stocks to derivatives. What are derivatives? That's us, folks. Futures. Okay, now there's others, options. There are more complex instruments. We'll just call them instruments. So what he's talking about is the shift from stocks to futures. Everybody hint, hint, nudge, nudge. Does everybody know that when you are trading a futures contract, that you are trading, you notionally are controlling more than $200,000 of the underlying instrument? Does everybody know that? Like these futures contracts, we're like, oh, one contract, Vinny. Did you know that one contract is controlling over 200 grand? You guys didn't know that? Again, you're going to learn a lot from this video here today. Again, I don't usually go into the history and the how instruments work thing here. They're going to briefly touch on that here in a moment. But the whole point of this conversation is people are finding better opportunities in futures and E-minis, which is, by the way, have I not been screaming that from the rooftops for the last 6 years when we've been out here public? Have you guys been hearing me say, listen, futures, E-minis, there are 21 E-mini advantages that I have identified on the left-hand side of Discord, and these are like not the normal ones. Like go look at that whole list for us, and they are talking about this shift over towards futures. Ironically, even ICT, the fucking scammer from hell right now, he knows that he can't show anybody anything good in Forex, which he's been snoring you guys and fooling you guys about for forever. And now what's he over here doing? He's trying to trade in my world. He's trading the NASDAQ, which is one of the fastest E-minis that I love. This is my number one go-to. And he's lying to you guys. He can't even figure out. He's like, oh, I think I'm paying $4 a month for it. He doesn't even know how much this stuff costs because he's been trading paper for so long. The paper boy doesn't know jack shit about trading, but even he is over there trading the NASDAQ and the ES, the futures and the E-minis. So I find that ironic. So yes, please, ICT, please continue to, at least since you are a complete fucking fraud and a scammer and living out there in a shack in Maryland and your two kids are living in trailer parks right next to you, helping you with your fraud that we've discovered through our private investigators. These are all facts, folks. These are not, you guys are, he's pretended that he's worth $760 million. We come to find out, no, he's living living in a shack in Maryland, and he's been lying to you guys for forever. But at least even now, as he's trying to, you know, come over here and prove that he's better than me and gets in a competition with me, and I just wiped the floor with him, he is at least telling you guys futures are where it is, and these guys are saying the same thing. Hear it out from him. Let's go.
Words, you know, there's a lot more notional derivatives trading going on nowadays than there is equity trading. And so it's
measured by what? By dollar value or number of transactions? Or
no, not number of transactions. No, I don't really know the answer to number of transactions, but as measured, I think number of transactions would be yes too, but it's measured in notional value.
Okay.
So like if you trade a future, just for example, you know, you're actually like an S&P future, you're actually trading $225,000 worth of stock.
Okay, y'all heard what I just talked about there? So a futures contract on the S&P 500, it's $225,000 when you are running the Emini future, when you're like, oh, well, I'm just getting paid $12.50 per tick. Yeah, but you are controlling a large amount of capital. So for notional value, what he's saying is so each person who's trading a futures contract, imagine that you are trading $225,000. So when you're running a 4-contract trade, right, you're running $1 million position. Full stop. You hear what I just said? You're running a 4-contract scenario. You're moving $1 million. You guys catch this yet? Like, do you understand? And I know I've said this to you guys before, but sometimes you guys need to hear it from somebody else. That's why I thought it's going to be very powerful to kind of show two very intelligent people who know the space, who know the industry, not ICT, who's a fucking fraud and only, you know, he's a paper boy, but real people in the industry talking about this stuff. Super, super helpful. Let's go.
You know, and so the equivalent would be $225,000. Right? It's not dependent on how much money you actually put up. It's based on the notional amount that's traded. It's the real risk. So, but in the process of that happening, there's two things that are interesting. Two takeaways are interesting. One, if we look back a couple of years, the industry went to free on stock trading. So, you know, one of the questions is, how has the commission-free stock trading? I mean, imagine if there were still commissions for stock. There's no commissions for stock now.
I know.
And yet the derivatives business has crushed the stock trading business. So in a certain sense, it was never about that small little commission or ticket charge or whatever it is, because that really, going to free has not boosted the amount. In fact, since we went to free, the business has swung even, you know, much greater. The movement towards derivatives has been much greater, and those are not free. Futures and options are not free. That's one thing. The other thing is that, and this is a discussion that I had the other day in another conversation on air, which was talking about the growth hedge funds have got pretty much annihilated in 2021, because a lot of the core growth stocks that have really carried this market in you know, from 2016 to 2020.
Meaning Tesla, Apple, Google, Facebook?
No, more the growths, like the guts of the market, not that group, but everybody below that. So the Squares, the Spotifys, the DocuSigns, the DraftKings, the Pelotons and Pinterest, and all those stocks, those middle tier stocks, you know, the $25 to $100 billion stocks. Okay. Oh shoot, hold on.
Who is it?
No, spam, of course. So those middle tier stocks have been annihilated. So the growth hedge funds did really poorly. Most of them actually had either flat to negative returns in 2021. In 2022, in the month of January, they got annihilated, like down 8%, 10%, 14%, 15%, in some cases 20%. They basically track the indices tick for tick. Mm-hmm. So, and these are primarily stock only funds. So my question, my topic for today is, commissions went to zero a couple of years ago for stock.
Sure.
Thought process was, well, a lot more people get involved. Retail investors kind of drive markets, blah, blah, blah. What actually happened was people got involved in finance, but they immediately transitioned towards derivative products. In the process of moving towards derivative products, they became capital efficient in basically overnight. And in the process, they let the stock trading business to these growth funds, and they all got annihilated. Mm-hmm. Proving, again, my point that the retail investor is way ahead of the institutional investor.
What? Did he disagree with Vinny? Let's roll it back. Listen to what he said one more time. This is in case anybody missed it. Here we go.
Again, my point that the retail investor is way ahead of the institutional.
The retail is way ahead of the institutional investor. Full stop. Wait, what? Huh? What? Wait, what? Oh, this is that moment where you turn off the podcast. You want to turn us off because you're mad because you don't agree. Listen, folks, you guys need to stop, listening to yourself and your own ideas. You need to get out a little bit more and understand what's really, really happening. And if you are not the person that people are looking to, like looking at you being like, oh, well, stop listening to people who are not where you want to be. How about that lesson for here, right now, today? Stop listening to people who are not where you want to be. Well, my friend said that, that this and that. I'm like, well, let's talk about your friend. Where's your friend? Well, I don't really know. I'm not on the internet. And okay, listen, folks, stop it. Stop it. No, the person that you're talking about, these people, there are different levels of individuals and people know different things. Stop taking all of the advice from tards. I don't know how to reiterate that any farther, but I had somebody the other day, you know, I'm not going to say names, but this person came and said, oh, my friend was telling me that I need to do this and that, and I lost $120,000. And I'm like, what? And they're like, oh, my whole life savings, everything is gone, and da-da-da, please save me. And I'm like, listen, we can try to help you out, but like, you're at a spot now where you're literally saying that you have nothing, but you listen to a friend, right? And I'm like, well, is your friend rich? I don't know, not really. Okay, stop taking advice from stupid people. How about that? All right, there we go. But yes, he just said, folks, you, as a retail investor, you have an advantage. You're gonna be like, well, how? What? Listen in, folks. Listen up. It's the same thing I've been saying for forever, but now you get to hear it from two other very intelligent people. Let's go.
Investor. As far as the retail investor makes up about 20% of the order flow.
Are you cringing like Radigan did right over here? Okay, Radigan. You see his face when he starts saying it? He's like, wait, what? What am I hearing? If you're opposed to that, but listen up. Here we go. Listen.
But the retail investor drives about 80% of the market direction, in my opinion.
Look at his face. He's like, huh? What? I know. This is you too. Because I've been saying this forever. And I get this from you guys all the time. All you little fucking trolls. You're all like, he doesn't know what he's talking about. And yeah, I'm over here, multi-millionaire. Y'all are sitting over there. Huh? What? Huh? I don't understand. What? Can't possibly be. I don't like Vinny. He don't like his attitude. I don't like the way he talks. He's too mean. He's too birdie. He actually speaks his mind. It can't be.
I mean, are you just trying to be obnoxious today? I mean,
no, I'm not.
See, that's what y'all do. Oh, Vinny's being obnoxious. He's just obnoxious. He's just trying to get attention. Listen up. Here it is. Listen.
I'm not trying at all. This is my observations.
Oh, okay. I'll let you complete your statements. I don't want to interrupt you prematurely.
At least, see that? That's an intelligent way to approach this, folks. Hear it out. Hear it out. See, this is what I love about Radigan. He at least listen in. And by the way, ends up being swayed by it. Interesting, isn't it? Are you an intelligent person that could change your mind based on new information? I don't know. Let's see.
Well, that is my statement. I knew you were going to have a problem with that, but that is my statement.
So I'd like to start with a series of questions, if I might.
Okay, sure.
A couple weeks ago, we spoke about the meme stocks versus the overall marketplace and the power of the retail investor as reflected in the meme stocks relative to the institutional investors, Blackstone, BlackRock, down the line. You were unequivocal at that point in time that the institutional investor has as much or more power than they've ever had on overall asset pricing, and that the only way that a meme stock phenomenon occurs is some basically, lightning in a bottle. It's not going to go away, but you can't anticipate it. It's something that exists like fireflies in the forest, but you shouldn't plan your life around it. I just heard you tell me that the retail investor now drives 80% of price action. And I don't know how to reconcile the statement you just made with the statements that I heard you say a couple weeks ago. So that's my first question. I'm not being obnoxious. I feel like I may be missing something.
I'm not sure. I don't get what you're missing.
You told me that the institutions control the market 2 weeks ago.
No, institutions control the market?
Yeah.
No, I said, explain more.
My understanding was you're telling me that the influence on asset prices, the primary influence on asset prices, is the decisions of institutions, not the decisions of retail traders, and that only retail traders have a meaningful influence on some strange, peculiar situation with a limited float, with the meme stock, parameters. And outside of those limited parameters, that the institution is ultimately the generalized determiner of price.
No, I have never said that the institution is.
Now, when he said the meme stocks thing, you guys understand what he's talking about? If you guys are watching this video at a long, maybe in the future, maybe you guys don't know what happened. We had AMC, that's a movie stock, okay, that went crazy because everybody jumps on, let's put out this funny meme about how, okay, we got all these hedge funds who are short on this. If we bust them out of that and have a short squeeze scenario, we can take over. And yes, there was a meme scenario, like you talked about the meme stocks, to go and basically force the hedge funds out of their position by a massive amount of people attacking one scenario. That was AMC. Another one was GameStop. Okay, you guys remember GameStop? GME? GameStop, same thing scenario. Like they just found out, okay, what are the hedge funds the most short on, basically looking at the options information that's out there, and then they went and they did the same thing. A whole bunch of people pooling all their money, basically a bunch of pooled money will force people out of their shorts, okay? That's what he was talking about there on the meme stocks. And so what they were saying was those are exceptions to the rule because, these little meme stocks occurred. But now hear the lesson. Let's go.
Is the determiner of price. What I said is the institutions, because they're so concentrated, they hold most of the risk. They hold the risk. In other words, that they.
So if they hold the risk, then who gets the reward? Isn't this awesome? Ready? Let's go.
They have to, based on just the pure size of their holdings and their assets under management, they hold all the risk.
And by the way, I love that he said they hold all the risk. If you are a buy and hold, you just got to hope, right? You are hoping that the market goes up, okay? Because you can't move in and out. You can't move in and out, of the stock positions. You cannot move in and out like we do. We're going long, we're going short in moments. They can't do it. They have to hold, and he's just focusing on holding the risk. But I'm going to add to it that they have to hold their position, right? They have to hold for an entire year in order to get their even the tax benefits from holding capital gains, or you're in a 401ks and your IRAs that, you know, you're kind of forced to hold positions, right? So, Kerry.
I don't think they control price.
I misunderstood you then. So you're telling me now that you believe the retail investor controls 80% of equity pricing?
I think the retail investor controls 80% of the movement in almost all the markets.
Of the movement. Here we go.
We talked about meme stocks. We talked about a situation that was 100%, virtually 100% retail when it happened, and then that's the difference. Usually the holdings are about 80% institutional, 20% retail, but retail drives price because the institutions don't move.
That's where I was going to go. Basically, the retail investor in your portrayal is the marginal buyer and seller on price. They're not.
They're the emotion. They're the emotion. They're the emotional attachment to price, and the institutional investor just sits there and holds on to everything. In the case of the meme stocks, the retail investors were the 80%, and the institutions were the 20%. And I think it was a combination of all different factors, the perfect storm, that drove that crazy meme stock explosion. But that was one of those weird times where the retail investors basically controlled the underlying.
Coming back to your premise today, what makes you think that the dollar value of all that derivatives action on the retail side is profitable for them? In other words, but here's my second issue with your statements. You talk about scale and size on the derivative side, but then you talk about directional performance on the institutional side, and those are not the same thing. And so just because there's a lot of volume in the derivatives doesn't mean that volume is not generally declining in value any more than the growth stocks. And especially those derivatives, I mean, there have to be gajillions of dollars of call and put options and whatever on all the names that you're talking about that were a train wreck for people, whether it's in DocuSign or Peloton or all those names.
Yeah, I'm not making a statement about who's making money and who's not making money with those.
Well, you did, because you said that the hedge funds are not making money.
Well, the only evidence that we have is that hedge funds, which don't really trade a lot of derivatives, are not making money trading equities. That was my comment. They're not the big players in the derivatives marketplace.
Notice he said the ones that are not trading derivatives. Now, again, they keep using the word derivatives because they're trying to say the basket of futures and options, which are basically those are the primary two. But you guys are trying to translate this into what we trade, the E-minis and future space, or even non-E-minis, crude oil, the gold, the 6E, 6J, 6A, all of that in the derivative space that we trade, okay? If they are a hedge fund that trades with those, yes, we are driving and moving price. Why and how? Because you guys are like, no, we can't be moving it, can't be driving. Really? Remember, one contract is how much money? $225K. You guys see that? So if you're doing a 10 contract trade on the ES, you see how we start moving into the millions? Are you seeing how we start to push up real big? Okay? I'm just saying, like, pick the numbers. That's what they're saying. Yes, the derivatives markets and people pressing the buttons on the derivatives markets controlling the big notional values, the big basket of that of that money. Now we are moving the markets. You guys understand that? All right, here we go.
Nice.
There's nothing to compare that to. In other words,
there is nothing to compare that to. That's correct.
Different interpretation. And the institutions are all so dumb because, again, just like the management at a television network or the management at a government institution or the manager of the Federal Reserve, the management at a hedge fund, the decisions are always made by people whose instinct is to not lose their job.
Oh, you see that? And this is my whole thing about developers and project managers. Why I can't stand project managers. The majority of them are fucking morons. Okay? They always take the credit for the guys who can actually do the work, and they're just trying to maintain their job. They're trying to be this middleman between senior management who's paying the bills and the guy who can actually do the work, and they're taking credits, yada, yada. But the management of these things is about, well, they just don't want to lose money. I've told you guys what happens on FOMC days. Why do I have the rule on FOMC to trade toward the golden ropes? Right? Wherever the price is, where do we want to go on FOMC, pre-FOMC, and during FOMC? For the golden ropes. Why? Because I told you one of the main things is the mental driver of getting the price to that location is because hedge fund managers, they just want to save their ass. Think about their emotional position to taking a position is they don't want to get fired. Literally, and Radigan just backed me up on that. Like I've said before, you guys who like follow through on my lessons and you understand that what he just said there backs up exactly that. Because they were like, okay, well, let's just take it and buy it at the 50. Nobody is going to fire you for like, well, we were only buying at the 50 period moving average. If you bought above that, this shit hits the fan, Well, it's your ass on the line, right? They're not going to take the risk to make the money if buying at the 50 or the 200 period moving average, like, well, we just bought the 200. I mean, this is normal, good practices, blah, blah, blah. They say that to their manager guy and they're like, okay, you're cool. But if some guy took a risk and bought outside of that and was like, well, we bought higher than it, bought lower than that. And we're like, well, if it was below, why should we be buying? Because you know that the strength isn't in the market. We use it and guide it by the 200. This is why these things are important in our trading system, because I'm telling you, you still need to know where the big guys are looking and know that the manager who's controlling those assets is like, well, he's got his ass on the line if he loses money. He doesn't care about the money moving. You guys understand that? It's not his money on the line. He's managing other people's money. So his risk is all he cares about, and keeping his damn job that he's getting paid his, multi six-figure jobs, some of them in the millions, seven-figure scenarios on these money managers that they're trying to maintain. And Radigan just spelled it out and said it right there, backing up everything I've ever said on FOMC Day, trading toward the golden rope so that they can have their safety net of where they're purchasing. And he's going to go further into that here, talking about how they just play safe. They want to play it safe. They're not playing it to make the money, which is where I come to tell you guys, guess who has the best opportunity then? You and me, the retailer, with our technology, because I would not tell a retailer to go out there and go with your brain. Your brain, you're not going to do it. Okay, everything in the markets is designed to get you on the wrong side of the position. But this guy right here is going to back up the scenario with technology here in just a moment. Such a great conversation here. Let's go.
Yeah. Right. And so they try to think that's why they all herd into the same stock. So that way, at least if the stock goes down, it's not my fault. I didn't pick some crazy weird stock. All the things that you know.
See? Nobody can lay fault to the guy who's like, well, you just did what everybody else was doing. And everybody else said, well, you can't get fired for that, right? Love it. So basically, no risk, right? Let's go.
Argument was just to say that, and this is a long way of getting there, which is that the individual investor, in my opinion, it's been years coming. But the old adage where, the individual investor doesn't have a chance because the institutional investor has better technology, better information, and
better technology and better information. I'm gonna start slowing this down a little bit now, because I don't want you guys to miss this part, what they're saying. Going all the way to normal speed. Now this is gonna feel like there's slow motion, but here we go.
More money and better opportunity getting there, which is that the individual investor, in my opinion, it's been years coming. But the old adage where, the individual investor doesn't have a chance because the institutional investor has better technology, better information, and, more money and better opportunity, I don't think it's real anymore. I think the edge is on the individual investor because they're small, they're nimble, they can trade, they have better front-end technology.
Better front-end technology. What does that mean? That means interfaces that look like this. Right here, all the people who are like, oh, this looks like Rainbow Bright threw up on your screen. It looks like a unicorn had sex with Michael Jackson, right? All the little trollings. Hilariously enough, we're laughing all the way to the bank, bro. You see that little bubble right there? You see that perfection right there? You see this perfection move down to here? You see this perfection move up to here? You think this is by chance? No, my friend, because we have technology and these guys are agreeing. Are you following it? Are you seeing it? Are you understanding yet? If you're not, well, you might not be qualified to be here because you're not intelligent. And I mean, you have to at least be semi-intelligent to be here, folks. I can't, if you're stupid, I can't fix that, right? You voted for Joe Biden, you're stupid. I can't fix that for you. Let's roll.
They have they're equally able to apply their capital to strategies and to products that the institutional investor isn't even permissioned to use.
Now, what does he mean by, what do you mean the institutions don't have permission to use? What did I tell you before? One contract of the ES is 225K. Whoops, got that wrong. 225K. Can those guys at banks, institutions, can they do that? Can they go over here in one contract? How much does that cost you? $400 margin on our brokers. Can they do that? No. So with the $400, I can control 225K? Yes. You guys see how this goes? 2 contracts is $800 with our brokers, not ICT. ICT still telling y'all to trade with TD Ameritrade, which is he's like, oh no, you have $22,000 on this shitty ass platform at TD Ameritrade. And then you're like, well, Vinny, how are you trading so many contracts? because I use real discounted brokers. ICT is so fucking stupid. He doesn't know because he's only trading paper all the time and faking you guys out. ICT is a complete fraud and a con man. If you guys are still not figuring that out, all his bullshit pullback and all that kind of crap, he doesn't even know shit about that. And he's never had a live trading account that didn't go to zero, folks. And all 7 of the live ones that we've had recorded are all to zero. That's for ICT. So you guys who keep saying, oh, I saw some video last night, just some crackhead kid out there saying, oh, ICT is the only one who's proven this year over year over the last decade of profitability. And I'm like, bro, he is the one of the few that has literally shown zero profitability for the entire window of that time. But you guys just think that you just speak whatever you want. You say what you want. You guys are like listening to CNN over there in the ICT world. You guys are fucking like, you just think if you just say it, then it means something. And you're all frauds. Like anybody who's pushing ICT, smart money concepts, they are a fraud, folks. They're living with their mom in a basement somewhere, or like ICT in a trailer park. Next.
And their performance, I can't prove it exceeds that some of these hedge funds, but it's at least as good, if not significantly better.
I totally agree with that. I mean, I think that you speak truth.
Well, that's a huge swing. That's a monster swing.
Yes, I don't know why he's acting like that's not a big deal. He just stated right there. He's like, do you understand that we are now kicking ass and taking names? Those of us who have technology at our fingertips, we have all the access that they have, but better because they're stuck in old, antiquated technology. This is what I just said. The banks, the institutions, these guys who, the Charles Schwabs, all these people holding your money for you in your 401k and your IRA, bro, they've got antiquated stuff. They're probably still running on tape backups. We're talking about old ass technology. They cannot keep up with us. I'm using .NET framework to use the leverage of your gaming computer. Your gaming computer has more power in it than probably the entire data center at some of these institutions, folks. You guys understand that? Now, I'm not talking about the high frequency trading. That's a whole other thing. High frequency trading is not dependent on direction. They're literally just trying to arbitrage in between and pick up commission checks on the little tiny maneuvers between 1 and 2 ticks. We're not talking about those. We're talking about the people trying to control direction. You guys get it yet? Are you catching it? This is so awesome. Let's roll.
Yeah, for
that
sure.
Kills the whole idea before. The reason that, and again, the purpose in this discussion is because the reason before that people did not manage their own money and they had somebody else, they went to somebody else to manage their money. Well, not only did they pay a fee, but they were supposed to be disadvantaged. And my argument is they actually have the advantage. Whether they realize it or not, they have the advantage.
Yes, because folks, do you get it? You at your desk with something like this right here in front of you, folks, why are we and my members pulling out numbers that no other room is pulling out? It's because I figured this out before everybody else did, folks. That's it. It's called vision. Vision is seeing things before the rest of the herd. You guys understand that? Anyway, that was God gift, gift given by him above. I am not saying like, oh, I'm just the smartest guy in the room because I am just me and I did something about it. No, the good Lord gave me the knowledge and the brain that I have. I praise him all day, all day. He is the only way, folks. If you don't know that, go watch one of my sermons. I got 2 sermons out there that will blow your mind because I don't approach things like churches do, folks. You want to hear the real legit word? Go watch a video entitled The Message. Go type in, go search for it. Here we go. It's a life lesson here today. The Message will literally change your life. I guarantee. If it doesn't, come back here. I'll give you $100. Guarantee. The Message. That combined with the gospel. Okay. Now the gospel actually just means the good news. All right. You want to hear some good news? You want to hear truth? Go watch the gospel. Okay. The gospel. Tomorrow is Sunday anyhow. So you guys are watching it here this weekend, go watch those 2. They will change your life. I guarantee it. If it doesn't, come see me. I'll send you $100. Come tell me, Vinny, I watched the 2 all the way through. Didn't change a thing for me. Okay, come on. I'll give you $100. Go check it out.
Mm-hmm. And I know you talk about the technology, meaning that it's an easier interface, whether it's a Tastyworks interface or any of the other platforms. So I think that's self-evident that the technology has gone, even just in the past 3 years, is ridiculous what's happening. Yeah. But do you think that that's it? Or, I mean, in other words, what is it that gives anybody more information than they had 3 or 4 years ago? Whether it's...
I don't think it's...
See, he's wrong here. It's not about more information. We don't have more information. It's taking the same information and digesting it and putting it into a visualized package that can do this. Okay, that is the difference. Headshots, timing lines, that literally we can zero in on what we want and press at the press of a button, enter in 3 positions: entry, stop, and target with one single button. That was not possible in the past without the technology that we currently have here with our system. Next.
I don't think it's that somebody has more information. Well, of course, there's better information technology available today, and it's cheaper, and everybody has access to the same stuff.
Everybody has access to the same stuff. So it is how you digest it and how you process it to put it in something that is actionable. At the end of the day, information overload is information overload. But what is actionable? Now people are like, well, Vinny, I see your system, it's all a mess. It's because you didn't take the time to understand it. It doesn't take very long. It takes 40 days. I can take you in 40 days to get you to learn the whole system. Yes, it takes 40 days to learn it. You guys are like, oh, I took a 2-week free trial and I don't understand. Well, you're stupid. It takes 40 days. Actionable stuff. How do I take what's there, digest it, and then give me an actionable component, direction, and win? Boom. That what we master. And why he is 100% right, and this guy is getting it. Radigan's like, I think I start to see what you're saying. Yeah, okay, let's go.
But I don't think it's the more information. I think what people don't realize is that if you're an institution, there's a lot of limitations. Like, for example, Tastyworks won't even take you. Like, we won't take an institutional investor because we don't have the back-end facilities of what they need to distribute money, to give them their accounting type thing, we don't have that. So these institutions.
Same thing with me. People are always like, well, Vinny, how come why didn't you do this? Well, first of all, my system is actually transferable. So here's where Tastyworks is limited. Y'all are like, Vinny, you don't sell this stuff to any institutions. Yeah, I do. And I'm not giving out names. Again, that's our personal information. But all you guys who are like, you've heard me several times say, yes, hedge funds come to me and buy my system. You know why? Because they can install it on their own computers. Tastyworks, you can't. Why? Because they are web-based. They are limited. They are centralized. And we are not. We are decentralized. Everybody's talking about tokens and all this decentralization, and y'all don't understand that that's exactly what I have built inside of our platform. The Algobox is literally on your computer. A gaming computer is decentralized. All of these massively powerful machines all over the world, the hundreds of thousands of people who are using our, well, I don't say hundreds, we're still in the tens of thousands of people who are using our system, that all of that power being processed on individual machines, the collective is more powerful than any of these centralized places like It's the Tasty Trade. Okay, I love you guys and whatnot. You guys are cool, but you can't beat me. Sorry. That's it. As far as institutions, yeah, they can't take them. Can institutions buy my system and install it on their own and have their own guys run it? Yes. So all you people who are like, no, never seen it, and no, I'm not naming names, folks. I'm not gonna have you guys going out and harassing the institutions. I actually respect people's privacy and business intelligence. And you just need to be intelligent enough to know, folks, of course they're going to come to me to use my technology, and these guys are saying the same thing. Hello. Next.
Are really limited to the firms that have really bad old legacy technology. They're limited to the Goldman Sachs, to the Morgan Stanley.
The part where he said bad old legacy technology. Bad old technology. And again, it's really, I mean, technology usually think of, oh, that's got to be bleeding edge, but there was something that years ago was high-end technology. When they went from having to phone things in to somebody to people doing hand gestures on the floor, like, hey, you know, 5 5 5 5 5 5. I got 5. I got 5 5 5 4 5 4 5 4 3 3 3 5 4 3 3 3. Okay, you know, hand signals. We went from that to now here. Right, we went from analog to digital. Yeah, that was technology. But now we've taken that layer and put this layer on top of it, and now they can't compete, folks. You guys getting it? You guys getting it? Let's roll.
To the JP Morgans, to the Deutsche Banks, you know, to the Citibanks, to hold their funds, to clear through them and to execute through them. They don't have front-end technology. They don't have
front-end technology. They don't have Algobox, AKA they ain't got no Algobox. Next.
They don't have modern clearing technology.
Modern clearing technology, which is through clearinghouses like ours, whether it is AMP for me, that's my personal, you know, it's kind of legacy myself because NinjaTrader is quite frankly better, but I've got the best deal with AMP and because I am grandfathered with them. But you've got NinjaTrader who has now purchased, I mean, they're so big. Again, if y'all don't figure it out, NinjaTrader just bought I was about to say TradingView, but it's Tradovate. They've just bought Tradovate, the whole kit and caboodle. They just bought out all the accounts from Dorman Trading. Dorman is gone. You understand? Dorman's out. Phillips Capital, they bought them too. Do you understand? It's NinjaTrader. That is the underlying platform that I am built on top of. Do you guys get it? Anyhow, I hope you guys are figuring it out. Or if not, you're going to be left in the dust. Next.
They don't have the ability to integrate, on the clearing side, futures with options, with crypto and everything else. So they're.
But do we have that with NinjaTrader in our back end to connect it with Algobox? We do. We have all the tech to connect to all of that. That's why we are winning. You haven't figured that out yet? Go check out our stats. Go check out our numbers versus everybody else's. You're going to see it. Let's roll.
Super limited to basically being able to try and play catch up by trading stocks only. That was my point. Yet the financial media, whether it's the Wall Street Journal or anybody else, some cable news, financial news network or something else, there's still kind of the belief.
He's basically kind of slapping it because Radigan used to be on CNBC all the time on Fast Money. He's like, let me not name names, but yeah, he basically may as well have just said CNBC. Carry on. That,
hey, these institutions have this huge edge because Bill Ackman knows when to buy Netflix or something like that.
When you see him shaking his head, he knows the guys, okay? All the guys who come on there at CNBC, he interviews them all the time, and he knows, like, they don't know jack shit. How many times have all these analysts, bro, you could get a monkey in the room to guess direction better than the analysts. So Radigan will tell you, he's a CNBC guy. He's interviewed them all. Like, listen to these guys, folks. Let's go.
Which to me is a crock of crap.
Total BS.
I love it. Look, listen. Hold on. Let me rewind that part one more time. Crock of shit and a BS. And Radigan's going to say the same thing. I love it. Wait, here we go. There we go.
Belief that, hey, these institutions have this huge edge because Bill Ackman knows when to buy Netflix or something like that, which to me is a crock of crap.
Total BS. Yeah.
Total BS. Because the small institutional investor with $5,000 in their account now can trade any futures market, any crypto market.
You notice he started with futures. A 5K account, which is what I've told y'all guys. A 5K account. Not that, like, ICT is still telling his students that they got to have a $23,000 account. Okay, you guys have figured out like why ICT was starting out our competition with a 23K account, because he needed 22,000 to trade one contract. And again, he blew his account, folks. If y'all don't know, I've got it on good word that he blew his account, which is why he went to paper. He blew his fucking account in less than a week. ICT cannot trade. ICT stands for I cannot trade. You guys haven't figured that out yet? And yet, here's intelligent people. Sosnoff, who knows? This guy, who knows? And ICT doesn't know jack shit because he's a liar, a fraud, and a con man who only cons people out of South Africa and Nigeria and pays them to keep touting up his narrative. And they're fine with the little, penny handouts that he's giving to them to go out there and lie. So you guys hear all this chatter on social media, and they're all fucking accounts from South Africa and Nigeria, and you guys can't figure out that they're all scammers. ICT kids, wake up, smell the coffee, let's go.
Any option market, any stock market, okay? And basically within a few months, any tokenized market, and pretty soon any globalized token anywhere in the world.
Okay, so what he's saying there, in case the interpretation that the technology, aka NinjaTrader and Algobox, are going to be able to connect to any of those token markets, any crypto. Just say it. Everybody knows crypto. It's any crypto asset of any type will be able to be traded on our technology platforms. Next.
Which is about to happen. And in any FX product. None of these professional.
Yep, that's us too. By the way, everybody's like, well, Vinny only trades E-minis and futures. Yeah, because that's the advantage. But can we trade FX with our system? Yes. Can we trade crypto with our system? Yes. Do we have crypto traders who are using our system? Yes. And they are killing it. Go talk to some of our crypto guys in our room. Go look. Go ask them. All you gotta do is add the NinjaTrader 8 plug-in for the crypto markets, and you're in. Ready to go.
Hedge funds or prop funds can do any of that stuff.
Mm-hmm.
Yep.
In fact, here's the crazy thing. The market-making firms, the high-frequency market-making firms that we use that facilitate tasting, they're so good at what they do, they're not even connected to futures exchanges because they can't figure out how to do all the integration and the clearing, and they don't.
Did y'all hear that? They're stuck. They can't do what we're doing. Folks, do you understand? Y'all like, how could he possibly do that? Warren Buffett, how are they able to do the numbers they're doing? It's impossible. It's impossible. Blah, 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 blah. Folks, y'all haven't been keeping up. Technology has surpassed you. We're in crypto space now. It's 2022. Y'all need to wake up and smell the coffee. Speaking of coffee, let me grab me some.
don't even hedge their positions using one of the biggest marketplaces in the world. Because it's just.
And you're saying that's because the technological gap is so wide between the legacy institutional
That's
technology?
exactly right.
Yes.
That's exactly right. And
he all of
and
a sudden
because,
got it. Did you see him? He's like, oh shit. He had the oh shit moment. He's like, I gotta pick my nose again. Sorry, I paused that in the wrong place there. But yes, it's exactly right. Exactly right.
I believe that.
a lot of the capital that they've raised it under a certain set of, like, let's call them like legacy documents
Yep.
that
Or bylaws.
that prohibit certain types of hedge vehicles and things like that.
Yep.
So they get stuck with over-the-counter contracts with single counterparties, and it's archaic.
Now, people who don't understand what that means, okay, I'm going to give this real quick because people who don't know what market makers are, because ICT is lying to you guys. He lies, acts like he knows what a market maker actually does. So a market maker has two books they balance, okay? They got one on this side and one on this side. If they are, I'm going to make this real simple. If they are -5 on this side, they need to be a +5 on this side. It is as simple as that, okay? Because they make the money on the gaps. Okay, all their line is making money on the gaps. Now, some market makers can on occasion take a bet to one side or the other, so I'm not gonna talk about the exceptions, but their whole deal is to balance two sides of the book. They can use what he said, they are limited to certain things. They can do stocks, of course, and they can do options, okay? But what he just said is they have no way to connect to futures. Now, mind you, so if on stocks I had a, I should have done plus side on this side and a minus on this one, okay? So just keeping it simple. So you buy some stock over here, okay? So let's say that he buys 500K of stock over here on this book, okay? So he's a plus 500. What has he got to be over here? He's got to be at a minus 500K, okay? Well, how can you do that over here if you used futures? How many futures would you need to be short? So if he's long on this side, okay, so long, it needs to be short over here to balance his book. Okay. How can he get short on the other side of his book? Just 2 contracts. You guys understand that? 2 contracts. Why? Because I told you guys the notional control over here is nearly 250K. Again, it's not perfect. Okay. So let's just bump it here. All right. So 225K. So it's 450K. All right. You want to part hairs here? Well, if he said 500, that's not that balance. So 450K. Plus, to the long side, you would need 2 contracts short on the other side in futures, right? Okay, but did you hear what he just said? He said they don't have the technology where they currently are. But they're waking up to this, which is why hedge funds are buying my shit, guys. Why I'm saying to you guys as retailers, I will let you use my system for free if you cannot afford it because I got hedge funds buying my shit. Wow. You guys waking up yet? Let's roll.
The way these institutions operate. Yet the retail investor pays virtually no commissions for anything. Stocks is free. Everything else is minimal. And they have the greatest technology in the world. They have access to all these marketplaces. Yet still all we hear is, oh my God, this professional manager over here on this crappy ass piece of software is going to do a
I love what he just said. On this professional manager over here, on this crappy ass piece of software, he thinks that he can beat Vinny Emini. This is what he's laughing at you guys for. Oh man, I love it.
better job of managing your money. It's not possible.
Not possible. That's what I told you.
It's not possible.
Look at Radigan's face. He's like, oh, he's having that. Oh man, that's what Vinny's been saying all this time. And he's like, yeah. Vinny and the Algobox team, folks. Yeah, that's right. Are you guys catching all that? ICT, all you little scammers, y'all can suck it.
My only, so I agree. Honestly, I find very deep truth in everything you're saying, and there's great logic that supports
He's just
it.
having a hard time with the cognitive dissonance.
One point of divergence that I still question, or I have some skepticism,
All right.
is somebody who is a professional of any kind, even with a weaker technology and bad paperwork because of legacy contract structure, blah, blah, blah.
So he says, okay, within its limitations, he admits that there's limitations. Okay, what's your argument?
They still devote the majority of their time, if not all.
Devote the majority of their time. And here's him going, oh, the devotion thing. Well, let's talk about that. And Vinny talks about that too. They devote their time. So can they be better with it, even though they got a crappier tool? Because I'll give an example like this. So you got a carpenter who slams nails all day. He's using a hammer. Okay, he's like, whoa, bam, whoa, bam, whoa, bam, whoa, bam, whoa, bam, whoa, bam, whoa, bam. It's just sort of like the Paul Bunyan thing, right? Paul Bunyan versus, he got beat by the new technology, you know, the tree chopper, right? He's out there, you know, he could just slam trees, bam, 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 right? Okay, so the guy who can do that, Paul Bunyan, right? Could he beat the tractor? Well, ultimately, he could try. They're equal and equal, but Paul Bunyan died. You guys get that? Right? The Tom Sawyer, I think it's the Tom Sawyer book. You guys know what's up? You know what I'm talking about? And well, here's the whole thing. He's about to say, well, can't they, even with their old technology, with their hammer, okay? Can't they with their, my bad drawing of a hammer here, okay? Can't they, with their hammer, in their little claw hook back here, do better than my auto nail gun? Okay, I don't even know how I draw a nail gun. Here's my trigger. I'm just gonna draw a real gun and it shoots nails. Okay. Okay. Do you think that the guy with his hammer, because he does it all day and he's a freaking he's been doing it for so long and he dedicates it, the guy who's a novice with a nail gun? Well, I'd say they're kind of equal and equal. But this is what he's about to say, and let's hear the answer. Here we go.
All their time to that thing. Whereas the majority of retail investors do other things and they do their retail investing as a secondary activity. They're a doctor, they're a lawyer, they're a butcher, they're a baker, they're a teacher, they're a dentist, whatever. They're not you, right? They're not sitting, they're not all day on the screen. So I think there's a difference between a Tom Sosnoff as a retail trader who does it as a job, right?
Tom Sosnoff, he's saying that you do it, yes, because you do it as a job, you do it 24 hours a day, versus...
Right? I mean, kind of. I mean, you all run these companies and you do this media stuff.
Yeah. But no, I definitely do as...
You understand, but relative to a butcher, baker, candlestick maker who does...
He's talking about, you know, you, everyday Joe, everyday Bob, everybody who's going out doing their jobs every day. How can they possibly make it? Well, I'm going to tell you that the great equalizer is technology. Algobox is why our guys are kicking your ass. You, I know you're a trader, you're listening to this shit right now, and we are destroying you, and you keep wondering why you're blowing your accounts and refunding and blowing your accounts and re-adding to your account, and keep blowing, but you're like, oh, but I just listen to the guys on Twitter. Oh, Twitter says, you know, FinTwit, you know, Tom Dancy's the king of Twitter over here, and he just keeps saying that we just keep trading levels and we'll be fine. Folks, you're all running out of time. I'm just telling you. Even Tom Dancy's shifting over, right? I've had conversations with him. We laugh about it. You know, he's my buddy, right? I got to give him a hard time, right? But, I mean, honestly, his system sucks, okay? If you want to trade levels, yeah, he's probably the best guy for levels. But once you kind of figure out that levels are just levels, yeah, look at his numbers versus ours. His numbers, I think results matter. That's my personal opinion. Let's roll.
Does it on the side, that the person who does it, it's like hours in the cockpit. If you've flown for 10,000 hours in an airplane, you're better at flying an airplane.
Yep.
If you haven't, you're not, in general. And I'm curious how you resolve that final component, which is the time.
Some truth to that, but
I'm going to point in mine because he's not going to say this right here. But mine is, you want to use the airplane analogy. Okay, you're flying in your old Cessna over there. Okay, now I've got my new G35. Okay, and my G35 is equipped with Vinny Emini's AI artificial intelligence system that basically flies itself. And all I need is a person who I've flown a couple of times and know my way around, and I know the emergency situation, whatever. I don't have all the experience of the guy spent 10,000 hours in his Cessna over there, but he and I can now fly at the same, and in fact, my G35 is faster, so you are fucked. There you go. That's my example, Radigan. Let's see what Sosnoff has to say.
But I don't think that you have to be proficient at driving in a banked racetrack to be a good driver. Like the fact that I might not be able to make it one lap around Daytona in a race car does not mean that I can't drive on I can't drive in the rest of this country and stuff like that. I mean, the fact that I can't ski the slalom, or I can't ski, the backwoods at Vail, but I can ski
I think he's using a terrible word analogy here. This is why I say let me help him out here. He botched this one, but all right, here we go.
Rest of the mountain is, I don't think that means that I can't participate. Do you know what I'm saying? So
I also forget participation. He's talking about participation awards. I'm talking about winning. You guys heard my analogy of it. I've got better shit. So the guy over here not using the better shit is not going to beat me. Okay. This is a bad example. Sorry, bro. Just giving you a hard, you're getting caught on the spot. I get it, but you guys get my analogy. I think he would have appreciated that. Also, The time dedication. I've told you guys before, our system gives you 3.5 years of space in your mental capacity. 3.5 years, and 4 years is 10,000 hours, as Radigan mentioned, the 10,000 hour rule of you can become a professional in anything in life. You'll be a master at it in 10,000 hours. Well, we give you 3.5 years of that time, which means you only need 0.5 of a year, which is how long? 6 months. 6 months to become a professional. That's what our system does. How does it do that? Because the technology handles all the rest of that. Now you're gonna be like, well, what happens if the artificial intelligence breaks? I get that argument all the time. Well, what if the artificial intelligence just stops working or stops breaking? Folks, don't you, this is what versions of code are for. What, you think it's just gonna disappear because that happens? Well, what happens if something, Vinny gets hit by a bus? Folks, we have a company. There are multiple owners of this company. You guys don't know that? Again, this is a fully functioning, it's an LLC as of right now. It's shifting over to an S Corp this year. Literally, we're launching the new website, Algobox Pro. It's been on vinnyemini.com/Algobox for, the last 6 years. And now in our 7th year, Algobox Pro is coming out, and it's a new LLC, a new company name, and turning over to an S Corp, eventually to a C Corp if we were to sell, although I'm never gonna sell. I'm telling you right now, never gonna sell. Never gonna sell. Let's go.
So no, I mean, I don't disagree with that, but the final selling point is I'm an expert in this. I do this 10,000 hours a year, so I can ski the trees at Vail, or I.
First of all, he doesn't know how long 10,000 hours are, but there's not 10,000 hours awake. Like, there's not awake hours of 10. If you're at your desk for 8 hours a day, it's 3.5 years. Yeah, you can't do 10,000 hours in a year, but okay, it's okay. We'll help them out a little bit. That's why I'm here. Okay, I'll teach you.
I can drive.
That's right.
And you're paying me a fee because yes, we can all drive, or yes, we can all ski, but those of us who can drive at Daytona and ski the trees on the.
Yeah, because see, he left him open with a really shitty word picture. My G35 would have busted this argument right here.
The triple black diamond make more money. And if you give me that money, if you pay me a fee, I'll make you more money.
And that was the argument, and that argument held up for decades. But now what is happening is that person that so-called expert is a one-trick pony.
Yep.
And one-trick ponies, they don't make it anymore.
Yep.
The one-trick pony's dead.
Yep.
You have to be able to.
Did you hear that? The one-trick ponies are dead. All that shit, all that investment into this and that. No, we all have access now. Stocks, if you want to trade stocks, you go buy your own ETF, folks. You open a TD Ameritrade account, because I will just go, look, TD Ameritrade is a place if you're doing a 401k or IRA and you're not trying to like intraday trade all day long and you just want to buy and hold something, you go over there and you can invest no percent. There's no 1.5, no 3% thing that your bank is going to charge you or any of these institutions. They're done. The money managers are gone. You just buy your own ETF, and they're not beating the S&P 500 anyway. So buy an S&P 500 ETF if you want to just like keep it stable and steady. Go for that. And then if you want to like rock it out and make income, like us rocking the trees out and basically hitting the slopes, and yes, double black diamonds and all that kind of crazy stuff. Ironically, we've got double cross, double moves. We got 2-finger salutes. We've got J hooks. We've got HMDs. We've got Harmona dots. We've got PRZ crosses. The stuff that we have that I hand to you, that any 10-year-old, my daughter can trade better than most traders in the world because of technology. Listen to what I just said right here. Because of the technology. That's it.
To do multiple things, meaning you have to have Henleys to the JP Morgans, to the Deutsche Banks, to the Citibanks, to hold their funds, to clear through them and to execute through them. They don't have front-end technology.
No front-end technology, aka every time he says that, think Algobox. They don't have Algobox.
They don't have modern clearing technology.
They don't have the clearing technology because they're stuck on their antiquated clearing houses. Next.
They don't have the ability to integrate, on the clearing side, futures with options with crypto.
No futures on options, no futures on crypto. They can't do any of that because they can't interface with them, but we can. Next.
Crypto and everything else. So they're super limited.
Super limited.
To basically being able to try and play catch up by trading stocks only.
Yeah, they're getting wrecked. That's why they're begging people to come trade stocks now. That's why stocks are at zero commissions. Next.
That was my point. Yet the financial media, whether it's the Wall Street Journal or anybody else, some cable news, financial news network or something else, there's still kind of the belief that, hey, these institutions have this huge edge because Bill Ackman knows when to buy Netflix or something.
I think I hit the wrong button. How far were we into it? Sorry.
GM, look at Ford. They find
Degree to which what you're describing ultimately continues to be revealed as true and accepted as true. And I just know there's some other conversations in my mind
for decades, but now what is happening is that person that so-called expert is a one-trick pony, and one-trick ponies, they don't make it anymore. The one-trick pony's dead. You have to be able to do multiple things, meaning you have to have multiple strategies, multiple products, multiple things like that. That doesn't exist anymore. And so on their level. So what they're trying to do now is to squeeze you into a very tight box, which is essentially we can handle one thing and one thing only. And that is a tough argument. Listen, I can buy a stock for you, but I can't sell a call against it. I can't sell a put, but I can buy stock for you. I mean, all these questions they can't answer, or I can do that, but I have to do it in a separate account. It requires you putting up more money, and I do blah, blah, blah.
Yeah.
Like, it's not, they've missed the transition.
Well, they are missing, but these are also smart people who make a lot of money historically. And I would think to the degree to which what you're describing ultimately continues to be revealed as true and accepted as true. And I just know there's some other conversations in my life that I had even just on the bank infrastructure, like software, like these old banks. They are slow and they are late and they might have missed it, but they're not poor and they don't lack influence, and they will figure something out. I think
I don't disagree. I don't disagree with you. I mean, unfortunately, there is an element of too big to fail or too old to fail. They may not go anywhere, but I don't necessarily disagree.
Yeah.
Which is where I actually think, so I have a suspicion. This is just if I'm looking into the future, I think they're going to keep upping the price and put regulations in so that it makes it harder for us to do what we do. Folks, this is the heyday. If you don't know that we are in the heyday right now, this is like the biblical perspective of Joseph when he got the warning that the 7 years of famine were coming. Okay, there were 7 years of feast for the 7 years of famine. Folks, right now, we are right here. 7 years of feast. Okay, before they come and take it, they're already starting to up the commissions on everything. They're already starting to increase the prices on everything. They're already starting to increase the tax levels on this stuff to try to scare the small guy out of what they want, because now so that the big guys, like he said, can catch up. And they have. What do they have? They have money and they have influence. Folks, I'm just telling you, if you're not getting in on this now, like, you're missing out. That's my opinion.
The question is, how would they do that? Right. I mean, I think the interesting discussion is, let's assume that they're going to do something to recover from being sort of left on the side, aged out, technologied out, whatever, systemed out, but they still have plenty of dough and they still have plenty of smarts, and they see what
they got Nancy Pelosi in their back pocket, Chuck Schumer's, and they're going to regulate the shit out of you guys. And I say you guys because, I mean, look, I've already made my bank, right? I've made it, got the nest egg stored away, got all that kind of cool stuff going, but these guys are going to wedge you out. So get it while you can. I guess that's my plea to you for yourself, because I don't want to see people hurt, folks. I see what the world is going to, folks. I see it. Evil's taking over, and you believe in the rapture, maybe there's going to be an escapism theory, but I don't know that I'm not sold on that. We'll talk about that in another series, maybe tomorrow on Sunday. Maybe we'll do a sermon around that. Will there be a rapture pre-tribulation? Of course there will be a rapture, but will it be pre-tribulation? Let's hear some arguments out on that, maybe on Sunday. Let's talk about it.
Casey Dre's doing. They see what he's doing. Robin Hood. They stay not dumb.
Yeah. They figure it out. I mean, look at GM, look at Ford. They finally, after 2 decades or 3 decades, they made a comeback. But it literally was 2 or 3 decades.
2 or 3 decades, and I hope we have that much time, folks. Although I think some of those decades have already started to pass, and they are starting to catch up, I think. But now that crypto and some of these others have come in, I don't know. Maybe we're at the start of it. I hope. But all I know is it's usually their 7-year cycles, so be careful of that. Don't hold out too long. I mean,
stuff didn't move for 2 or 3 decades, and some of them never make a comeback. Look at IBM. But
yeah, IBM was supposedly too big to fail. Oh, IBM will never go in. Really? IBM's toast, right? Give me a break.
Some, like Ford and GM, they were out of it. They made a comeback to a certain extent. You
know that, right? You know that's why IBM went out, because they stuck on their mainframe, centralized processing. And what are we doing? Right? They're all centralized. What are we doing? Decentralized. Gaming computer. You think your little centralized body, I don't care how big it is, make it as big as you want. All I got to do is add another PC. Right? This is the power of crypto too. All of our processing is happening out here. And these are fast-ass computers, and you think you're going to beat all of us against you? Ah! Happened, bro.
Citigroup did a little bit, maybe not that much, but there are a few of the financial stocks that have clearly made a comeback, and but they're not the future of finance.
On top of the technology, you guys understand that? Like, Citigroup is one of the few that try to keep up with the technology. And again, their technology is still old as shit, right? But at least they internally to their hedge funds are using. They've got the front end interface a lot easier than all the others do.
I don't look at JP Morgan.
They could use their scale to copycat the future and pretend.
Very difficult because it's been tried before by the Verizons of the world, by the telephones of the world. It's been tried. They constantly fail. I don't look at JP Morgan as being a growth leader or Verizon as a growth leader, any of that kind of stuff. It's almost impossible. I mean, once you get past, the Apple, Amazon, Microsoft, there's a handful, 5, 6, 10, maybe 20 companies total. Once you get past those, everybody else fails at that attempt. They survive at a very high level of production, but they fail at that growth stage.
Yeah.
Mm-hmm. Anecdotally, I have to, I can just tell you my life experience, even over the past year, the number of people who are just people, not Wall Street people. The guy's a professor at UVM, or this one's a, HR or a headhunter person in San Jose, or people. And they're all in here doing these things in a way that I've never heard from they would never know to sell a put as a way to put on a directional bet that has some, additional de-risking because of the potential for the volatility decay. Like, they wouldn't know what that sentence even meant.
You know why they know it? YouTube. You guys sit right here. You're learning it from your phone right now. You're listening to me on your phone. You're listening to me on a device right now. It's because of education. You put in that education and the technology to do it. This is the combination. What he's basically saying is, well, actually, I guess anecdotally means your own person, because a lot of people don't know what that means too. Anecdotally means what you have personally witnessed. That's anecdotally. Okay. What he has seen personally is that his friends, his people that he runs into, are all of a sudden doing these complex things. And he's like, wow, that's pretty impressive that you know how to do that. So admissions right there that the education and technology are catching up, and are not only catching up, but they're ahead now. Sorry, folks. Read them and weep.
And I think that's more of that the fluency in the language of a higher degree of sophistication in trading is the highest it's ever been. For that, I completely agree.
I would agree, which takes me back to my first statement I made today on the podcast, which was, has the zero commission for stocks, essentially the zero commission for stocks, has it changed the industry in such a way that, like, it didn't change the industry by increasing the amount of stock business we do? I mean, what people don't realize is that every brokerage firm in America now, pretty much that's free, loses money when you trade stock. When you as a customer trade stocks through us, we don't make any money. In fact, we lose a little bit of money every time you trade stock. So there's no business model where every time you do something and you lose money, that's a good business model.
That's not a good plan, sure.
Right. But what has happened in the process is that you have become a motivated, self-directed, engaged investor, which means that you will look to alternative uses of your capital that are much more capital efficient than stock, and that you will do things that will ultimately, either generate a fee, a commission, a payment for order flow, whatever it is, that will, that will keep the game going, that will allow us to build the technology, that will keep everything moving. And that's important.
Well, that's exactly what I was going to say, which is that I actually think that the removal of the commission, the removal of the commission on underlyings was interpreted by people, even myself included, maybe not consciously, but to suggest that the reason it's free is because it doesn't have that much value. Right? That if you want something that has more value for you as a customer, I don't mean value to the brokerage, that you want to have something that has more capital efficiency and more leverage in it, so that there's for every, you understand, I don't explain to you the dynamic, but I actually think that when there was a commission for stocks, it created the appearance that the stock there was real risk and opportunity in that stock. When it's free to get in and out of the stock, in some ways it diminishes the perceived value of the stock.
Perceived value. I've told you guys that too. Like, when people are like, well, Vinny, why don't you just give your system away for free and whatnot? Well, if I gave you guys for free, well, then its perceived value would be zero. Right? That's another thing. And I'm not talking about just Algobox. I'm just, in general, he's admitting that this is a thing. I've talked to you guys about Anthony Robbins, who did this whole same thing. Like, the value placed, so the amount of money put into something, people put a value on it. And so he has a good point there with so it's zero commission. You feel like, oh, it's not, there's no value to it. So, well, let me see. Oh, what still has commission? Oh, futures. What's that? That has futures commissions. Well, let me look at it. So now more people are becoming educated on it because they're kind of forced into it because of a perceived value of zero, that buying stocks is zero value. So it's very interesting, right?
Stock itself, and peaks in interest, and what happened, because also it's not just that stock trading became free, it's that the fees for options and futures contracts also came down by how much? 50%, 70%, like a lot. And so it's not, so it's like, so I actually think that the decline that the eliminated commissions in underlyings is what creates the demand for the derivatives, because it's free to take. It's like you're free. It's your first action is free. So there's no, like, it's like giving away, this is a bad metaphor. I won't even use it, but you know where I'm going. But you give away the first experience for free, and now you've had this experience. So now you're interested in what else is available in that world. Whereas in the old model, there was a sense that you had to have more money than a few grand or even a few $100s. And if you were going to do it, you also had to pay some fees. And now you can do it with $50, or whatever, nothing, and it costs nothing. So it's the accessibility. I think that the making stock trading free is what created the demand for the derivatives, because it made it easy to fill that first room of the parlor, if you will.
So,
okay, now I realize what he's talking about there. Okay, he's Steve. You could have gone with a different analogy there rather than the whorehouse analogy. He's like, oh God, I wish I hadn't said that. Okay. Maybe drug dealers. Drug dealers give the first one away for free, and then you pay for it later. I mean, I guess I'm probably maybe for that. But yeah, get in the first one for free, the freemium model, right? All right, we give you the first part for free, but hey, you want to upgrade. It's the freemium model, works in gaming now too. Like, oh, the game's free, but then if you want the cool custom skins or you want a cool weapon or whatever, you got to pay. So maybe that's a better analogy for it. And he's like, oh, God bless, let me start.
Brings up another really interesting topic. There are a lot of challenger banks. That's like a neobank. A challenger bank is like Revolut or something. These are kind of the next generation of banks or things that look like banks. Credit cards and everything from simple
deposits and payments and things.
Yeah, payments, payday loans, immediately, borrow money anytime you want, get your paycheck a couple days early, all that kind of stuff bundled into a single platform. Super simple. Open an account in 10 minutes. This kind of stuff. But the challenge to bring on new people, to get them into the world of this kind of finance, which is a little bit different than like managing your own money finance. This is more of like a little more of pseudo traditional finance. Well, the challenge to get people in this has now that people are looking at actually how are these firms doing revenue wise and profit wise, their valuations have been decimated. And today, PayPal came out with earnings. They had earnings last night. The stock's down, went from like 175 to 130. Stock's down $45. It lost about 25% of their value overnight, PayPal, which it's already down. Like it was already cut in half. And then it lost another 25% of the value overnight. And the interesting thing was that they said that PayPal got burnt by bad actors. What that means is they were making they were a huge push to bring on new accounts, but new accounts that they were willing to pay, let's say $10 or $15 for. Now, in the brokerage business, just to give you an idea, like a new account to us may be worth $500. So we may pay $500 for a new account. They'll pay $10. That just shows you the value. Their accounts are worth about $1 a month or something like that. And so their earnings and their future projections were destroyed by bad actors using bots to take advantage of their offering of just $10. Mm-hmm. Now, what's so fascinating about that is when you look at their market cap is down by almost 70% off their highs. Something like that, 65 to 75% of their highs, but 25% overnight and 50% before that. I mean, a complete obliteration of their market value. Same thing with every other firm in that neobank space. And what's interesting about it is in a matter of the month of January, the entire financial service space in the world of kind of like new age banking was priced from outrageously frothy down to fair market value or cheaper than fair or below fair market value in less than 1 month, which shows you the speed at which things happen, which also goes back to show you that what's happened is, getting back to your point, customers have become very sophisticated in a short period of time. So whether it's a professor at this university or it's a student at this university or it's somebody that's, working for
headhunter in San Francisco, whatever
it is, they've gotten to the point where now their expectations are, they don't want that $10 account at PayPal. That's what they're not interested in. They're not interested in their $25 account at Robinhood. It's no longer of any interest. They want the sophistication of being able to get multiple, all the products, all the strategies, in other words, they want the upsell.
And I think the biggest thing that has driven that is free stock. The more I think about it, in other words,
that's the whole point of the initial part of the conversation. It started the whole thing.
That free stock became the giveaway that let people fiddle around with the toys, and it didn't cost anything to fiddle. And then people are like, this is kind of interesting. What else can you do?
Yep.
I mean, it's almost like the stocks trading should have been free a long time ago.
Yep.
From a business, like it was actually a bad business strategy to try to bang people on the front end when they bought stock, because it was keeping a huge percentage of potential customers from ever coming into the room.
When stock trading went to free, essentially the first big firm to do it, because they were a little petrified of what was going on in the marketplace, was Schwab. And they did it because they were scared of what Interactive Brokers, Robinhood, somebody else might do. They didn't want to be second in the marketplace. So Schwab, for all the wrong reasons, made the move to go to free. Their stock went from $35 to like $30. They lost 20% of their market value overnight. The entire industry lost 20%. Every analyst, everybody watching this space got it completely
beginning
wrong.
Of the end, man.
Beginning of the end. What happened was now, because of that move, for all the wrong reasons, their stock is $90. It's tripled.
Which then goes to the ultimate Tom Sosnoff point, which is that no one knows anything.
Exactly.
Because even if I told you that Schwab was cutting their commission to zero, you would probably think that that's a negative indication for the future of that business, because and yet here we are.
Exactly.
Yes. Do you guys see it? Vision, folks. Seeing beyond what everybody else sees in that moment. And look at the smiles and look at oh, I finally get it. And he's like, I've been telling you guys, folks, that's the smile I have on my face all the time. You guys don't get to see it because you guys get to back me all the time. If you want to see the front of my face, by the way, go check me out on Instagram. I go out there and I'll tell it to your face, folks. So go hang out over there if you guys want to. Everybody's like, Vinny's just trying to hide out there. No, folks, there is some helping to be a little bit anonymous in any space out there. I like to go to the grocery store and people not recognize. You know what I'm saying? It's pretty cool that way. But hey, Go check that out. I just love this. We're wrapping up this conversation right here, but it was this moment. It was at this moment he knew. He got it. Oh, hope you guys enjoyed that. Thanks for hanging out. For me, Pimpy Robert, Let's Ride, Mod Squad, Quarters, G, and the rest of the gang. I am sending out the big action. See ya.